Hello traders, my name is Horvat and welcome to a new video, special edition, in which we will take a look only on the stock market, on some major indexes like the S&P 500, NASDAQ Composite Index, and Russell 2000. We will also take a look at the DAX. So actually what I will do here is an update you regarding the long-term picture on the stock markets. Okay, now 7 months back. Actually, it was on October 14 in 2014. Uh, I said that stocks are probably headed to new highs. Now, at that time, I was looking for a finished correction. Okay, now we were tracking a fourth wave, uh, which are visible here on these charts. Okay, so at that time I said that we are tracking a very sharp and aggressive recovery, okay, on all markets. So actually we were looking for an extension up into red wave 3. As you know, an extended red wave 3 should contain 5 smaller waves, so obviously I was looking for more gains after a consolidation. So we had a pretty solid pullback at that time, and I obviously was looking for much higher prices, especially because long-term charts were telling me that we are bullish because we were trading well above this trend line. Now we are still well above this trend line, but it's important to understand the cycles in the Elliott wave theory. Okay, and more importantly, we can count 5 waves up within this an extended red wave 3 that we were tracking it back in October. So we know that from an Elliott wave perspective, after every 5 waves, market will reverse in opposite direction, either in a three-way maneuver, like an ABC, which means you will see another bigger correction, or market will make sharp impulsive bearish reversal. Okay. Now, based on the structure I suspect that we will see only a corrective retracement. Now we are at all-time highs on U.S. markets, so obviously try, I will not be trying to call all-time highs here because this would be crazy. Okay, you definitely want to stay with the trend and only focus on your minimum expectations. Now, minimum expectations from this point of view means a corrective setback, which could be for some new opportunity to join the trend. Okay, so what I see here is waves 1, wave 2 pullback, and extended wave 3. So obviously I'm expecting wave 4 and more gains up for wave 5. Okay, so on DAX, you can see also wave 1, wave 2, nice extended wave 3, expecting wave 4 retracement, and then another push higher into wave 5. Same we expect on NASDAQ. Okay, we see nice wave 1, wave 2 pullback, very nice extended red wave 3. Notice that this structure is much sharper, much aggressive to the upside than previous wave 1, which fits nicely with the Elliott waves theory, white lines, which tells us that usually the strongest wave will be wave 3. So you would expect now a wave 4 retracement, then move back to the highs into wave 5. Same obviously on the Russell. Okay. Now when it comes to fourth waves, it's also important to know that usually wave 4 will retrace back into the area of a former wave 4, which means that we could see quite aggressive selling here for those corrections. Now, when stocks are in a pullback mode, you really need to keep in mind that bears tend to be much stronger than a downside than bulls on the upside, which means when the correction will start, you could see some very aggressive selling because of a fear, okay, and people will be scared that maybe highs are in place, they will try to sell their stocks, which will cause acceleration to the downside. But again, this could be only a corrective setback. So when a lot of shares will be sold, again, I will be probably looking for enter for wave 4, and we will see again new cycle to the upside. Okay, so in coming months, I think that we could see those top forming in this extended third waves because I see market at the end of this 5-wave cycle. I particularly track the S&P 500 on a daily basis for our members, and we have some very interesting and very important pattern that we see it unfolding. We are tracking this ending diagonal. I highlighted this ending diagonal as a potential pattern here already back at the in October or November of 2014, and so far this is unfolding quite nicely. Now, if you're familiar with the ending diagonals, you know that those usually occurs at the end of a trend, okay? But in our case, we see it placed in a fifth wave at the end of an extended red wave 3. So it's actually not the end of a bullish trend, it's just end of a temporary end, okay, of this uptrend. So actually we would be looking for a temporary retracement. So I see it placed in a sub-wave 5 of a red wave 3. Notice what is really important here. It's that we can see higher highs here, okay, in this in the past 5 months, 6 months or so, higher highs, but with very slow price action, okay. So to me, this tells me that market is still bullish, okay, but bullish momentum is obviously decreasing because we are not seeing so aggressive buying anymore like we have seen in the past examples, okay? So you can see here that those gains were limited. So to me, it's a signature, an important signature that this trend can be called, this move can be coming to an end and that sharp reversal will follow to the downside, okay? So it's always good to be prepared. It's not good to call a top. I don't know if maybe top is already in place for the S&P, or we will see another swing high here for 2150 and then a sell-off. But definitely I am prepared. Okay, I'm tracking some very important price on lower time frames, especially this 2056. Just let me check what is the date of this support. That was established on May 7th. Okay, now this could be very important. If we see a break beneath this level, and if stocks would remain bearish and close bearish on Friday, which means that weekly trend would turn bearish as confirmed, then we will likely would see a broken trend line or this ending diagonal, and in that case, this should be a first warning sign that we have seen a top and that we will see more weakness. So for now, it can be a little bit too early to say that highs are in, but definitely be aware of a corrective setback over the coming months, okay? Because we have some nice Elliott wave pattern here, which is telling me that we could see a solid pullback in a red wave 4. Now, just to give you the perspective of how much we could see a decline on the S&P 500. Now, if you consider that maybe even this trend line can be tested, okay? Just a second. To make this clear, okay? If this trend line can be tested, or that we can see maybe a reversal back to previous fourth wave, then we could see a pullback for nearly for nearly 16, or maybe from a new high, if we see a reversal from a new high, maybe even 20%. Okay, so this would be quite healthy pullback, which would I love to see before this market will turn again into a new nice impulsive leg to the upside. Okay, so thank you for your attention and have a good day.